Everyone, this is Ryan Edner with your Tuesday, January 2nd morning wake-up call. We're starting off a new year here. The focus of grains to start off the year likely to be starting off on the South American weather maps, just like we left off last year. And to talk about those maps, we are seeing general drier patterns for both Brazil and Argentina, days 1 to 5, and then a return to moderate to active rains, days 6 to 10. Given the first 5 days start off dry, we may start off with the expectation of a slightly supported bean trade here. Beans did finish last year very close to $13 fair value. And also, let's throw in a conversation about the fund trade where they were sellers of 5,000, leaving them long a net total of just 5,000. So as funds would go, we would say that the funds are basically neutral, and we are sitting with the March beans at fair value or very close. So that's what we would expect. Taking out speculative trade, going to just the carry out numbers, you'd expect a number around $13. Now, corn funds were light buyers of 3,000, but they are still short 178,000. That's 55% of their record short, to give a percentage scale of how short they are in corn. And corn is just about 9 cents under fair value. So again, we can say that corn is under fair value, but only by seeing funds short that aggressive are we even just 9 cents under fair value. So we could start off this year saying the same thing as last year, that yes, corn is under 480 fair value, but it's taking sizable selling to move just 9 cents under that level. Again, like we started off the conversation, we should start to see more focus switch to the January crop report by late this week. Probably see much more of that early next week here. So we'll focus on South American weather maps to start, and then slowly turn the focus each day closer to the January crop report by early next week. A quick mention of outside markets. We are seeing crude up $1.65 as of this recording, natural gas up 14 cents, stocks, bonds each lower. So a little bit of reversing trade in a lot of outside markets compared to how we finished last year. We'll see if that's also a pattern we see start off the grains here this morning. Quickly going over to cattle, box beef did move lower again, even on Friday. So we did see $1 to $2 higher cash trades. That was a strong end to cash last week. However, box beef slowly moved lower most of last week, which starts off the assumption that this week, even though we finished last week strong on cash, might turn around and start trading lower. For now, where Feb futures finished last week, they're pricing in about a $3 lower cash trade. And if box beef continues a slow grind lower through this week, that'll be difficult to argue with. Even though we finished last week strong, we could start this year back on the weak side. Box beef, remember, box beef has been about the best overall total guide to futures and cash trade for the last 3 months. So we'll start off this year also keeping most of focus on box beef again. So that's what we have. If you have any questions, give our office a call.